Hey guys, it's UK and you are watching Invest Roundup. Stock market frenzy is far from over even though the US election was just 2 weeks ago. Threats of recession is ever looming, unemployment rates at all-time high, although some countries are surprisingly recording higher GDP than ever. And with countries around the world going into the second lockdown, it looks like the volatility is far from over. So, let's dive into this week's news. Disclaimer: whatever stock or news we talk about is not a recommendation to buy or to sell. These are just news we deem important, things we think you need to know if you're interested in the stock market or if you intend to invest. First news item: Pfizer comes to the world's rescue. The world cheered when Pfizer announced last week that they have found a vaccine for COVID-19 in collaboration with its German partner BioNTech. This vaccine has been found to be 90% effective in its final stage clinical trial. In fact, if all goes well, the shot will be made available for use by the end of the year. Eureka! Pfizer's senior vice president was even calling it a historical moment for the company to be able to come out with the vaccine within a year of a pandemic, which has wiped out a devastatingly large number of people, 1.3 million people as of now to be exact. The vaccine is expected to be submitted for emergency approval in the third week of this month, which is this week, ahead of other vaccine developers in the world. Following this news, Pfizer stock jumped almost 15% on the day itself and BioNTech shares jumped by 25% at intraday's high. Investors, however, had mixed feelings when Pfizer CEO Albert Bourla sold 60% of his stock on the same day the company made the announcement. More than half! He sold more than 132,000 shares in the company at an average price of 41.94 a share, or 5.6 million in total. And just early in the same day, he called the discovery a great day for humanity and a light at the end of the tunnel. So, announcement early in the day, sell off later in the day. The question is he in or is he not? That really remains to be seen. For value investor, however, even with the share price boom, the company remains undervalued. Meanwhile, travel companies are rejoicing at the news of the discovery simply because it means travel is in the foreseeable future again, after a downtime of close to a year which have killed even the biggest tourism-related businesses. The stock market, as though also jumping in joy, have also surged since the announcement. Forbes even came out with a list of recommended to buy stocks following this news, as hope for economic recovery is once again in the horizon. Second news item: Alibaba Singles Day break records with sales topping up to $74 billion. Alibaba smashed record hard this year with $74 billion for major shopping holiday, the Singles Day sales. This is nearly double their previous sales record, and Alibaba says the strong early number indicates that the demand in China is bouncing back after COVID-19. For those of you who don't know, Singles Day on November 11 or Double 11 is a Chinese shopping holiday started by Alibaba in 2009 to celebrate single people as opposed to Valentine's Day. This shopping event mostly revolves around online shopping deals and usually surpasses Black Friday and Cyber Monday in sales record. In fact, since 2016, Singles Day sales had surpassed the busiest online spree in the US. Alibaba Group Executive Vice Chairman commented that Chinese economy has found back to pre-pandemic level with 17% growth year-over-year for e-commerce, which signifies that people are now more willing to loosen their purse string a little to do some shopping. Alibaba competitor JD.com also cashed in with record sales over Singles Day this year, netting nearly $41 billion. Experts also attributed this surge in the e-commerce to the COVID-19 pandemic, which has driven consumers indoor and online. As it is, Chinese consumers are already buying 30% of the nation's retail purchases online. For Alibaba investor, this sales record came in as minor relief as the company's shares had recently sunk by 8% when sister company Ant Group suspended its IPO just 2 days before its listing. And as if that wasn't bad enough, the e-commerce recently took another hit when the Chinese government announced that they are looking to crack down on domestic tech retailers with their anti-monopoly rules, which caused their shares to plunge 9.8% in their Hong Kong secondary listing last Wednesday. According to Bloomberg, regulators are now seeking to restrict the growing influence of Alibaba and other Chinese tech leaders in the country and has triggered nationwide sell-offs in tech companies. At the moment, the company is considered to be a medium-risk investment. By the way, before we go on to the next news item, click on the subscribe button below now so you will be informed the next time we upload a new episode. That way, you won't miss any important market news. And finally, we look at the happiest place on earth. Has magic left Walt Disney? Even magic is apparently not enough to save the major franchise in this pandemic. Disney recently reported $2.4 billion losses for its parks, experiences, and product segment in its latest quarterly operating income. And things don't seem like it's looking up anytime soon, as their California parks are to remain closed through the end of this year. Even though majority of their parks outside of US remain open, it still doesn't help. Disney CEO Bob Chapek was quoted saying that he would like the California state to reconsider allowing them to reopen the parks based on the success they've had for other parks in keeping all their visitors safe. With their California park closed, Disney had laid off 28,000 workers in September. But the good news is, not all is lost. Even though their concrete business is not doing the best right now, their live streaming business is thriving. Disney shares climbed last week after it was revealed that Disney Plus gained 73 million paid subscribers as of the end of fourth quarter. This has certainly exceeded expectations on revenue and showed less drastic losses than anticipated. But compared to a giant like Netflix, Disney Plus proves that it still has a long way to go. Share prices increased by 6% after hours, but part gains when their CFO announced that the company would temporarily pause its semi-annual dividend to fund Disney Plus content. Still moving in an upward trend if you look at the prices earlier this year. News of the COVID-19 vaccine by Pfizer early last week have also triggered their share price to jump 12% as hopes are renewed for their parks to reopen. And those are the 3 important investment news we had to share with you this week. Once again, we encourage you to get more information if you would like to act on any of the companies we have shared about earlier. Comment below and tell us what you would like to see on Invest Roundup, and share this video with your friends, especially those who are vested in the stock market. See you again soon.